Welcome back. Cartesian Capital's Anthea Gardner joins us now for a wrap of the day's markets action. Thank you so much for your time, Anthea. Quite a lot that's happening, but it's really great to see green across the board there. Looking at the stock markets, we're all digesting, of course, the start of the interest rate cutting cycle here in SA and also in the US. An aggressive start for the Fed, but a more measured start for the South African Reserve Bank. What are you making of that difference in the kind of different sized steps that the two central banks have taken?
Sure. So, Nati, let's not forget the Bank of England also had their decision today, but they did nothing. So we'll ignore them, shall we? So I won't lie. I was surprised by the US Fed cutting 50 basis points. And what happened in the last week was that the market suddenly went from pricing in 25 basis points to 50 basis points cut by the Fed, which happened to my surprise. And I think, well, the other surprise, I think, in my view, was that hearing Powell admit to making a mistake by not cutting earlier, which is why he claims the Fed cut 50 basis points. And then, of course, he's signaling another 50 basis points for 2024. But of course, it remains data dependent. So we'll all be watching very closely what happens, especially in the labor market, because I think that's their concern. So the Fed hasn't cut by 50 basis points very often historically. And the times they've had, it's really when things were falling apart. When we were going into recession, there was a market crash and they needed to resolve something. And it's different this time. I don't think they're trying to stave off a recession. I think they just got a bit of a fright with this unemployment number. And then, of course, the reaction by the market was interesting because the S&P opened strongly yesterday, closed negative, and of course, today it's up running, right? It's absolutely running. And then how that plays into us is going to be interesting because, of course, when the Fed said 50 basis points cut, everyone suddenly on WhatsApp and wherever was going, oh, maybe we'll get 50 basis points as well. And I mean, come on, how do we know Lesetja Kganyago?
Of course.
like he's like the hawkish person I know, quite frankly. Look, I mean, I don't think he's wrong. You know, he was often asked, well, not often, but he was asked after today's meeting by the journalists that were in the room, do they think they made a mistake by cutting too late? Should they have cut sooner? And he said, absolutely not. And I can't disagree with him. I think the Reserve Bank did absolutely the right thing. What was interesting, of course, was that they had a 25 cut, a 50 cut, and a hold on the table, and they went for the 25. So I think if they'd cut sooner, they would have had a problem because the last meeting, inflation was still at 5.2%. So the fact that it's fallen dramatically, and even though we look at headline inflation, you know, they watch core and they watch it very carefully. And I think if they cut sooner, they would have lost credibility. And then, of course, there's the carry trade.
Yes,
like when last have you seen the rand this strong?
Oh, listen, that girlie is on a solid path right now. Anthea, let's get into some of the company news that came out of the JSE today. Firstly, starting off with Discovery releasing its annual results today. A significant increase in profitability there. They talk about lower investment into their new initiatives, of course, something that investors have been closely watching over the years. Also rewarding their shareholders. What is your diagnosis of that performance?
You know, Discovery saw an 18% growth in new business across the group. It's the bank that's kind of the thorn in their side. They tried to put a positive spin on it. You know Adrian Gore well enough to know he's such a positive person. And so they were saying that the losses narrowed in the bank. The bank is set to break even this year. I think it'll definitely be helped by the, you know, so I should say that the bank's narrowing of a loss has certainly helped boost the company's profit by 12%. So that's kind of what I'm trying to say here. And the number of clients in the bank has grown by 36% this year. But here's the thing. Investors are not buying it. The share was pretty much flat on the day.
That was interesting.
And I think maybe this interest rate cut will help, you know, because South African consumers see insurance as a luxury, bizarrely enough. So perhaps the rate cut will help boost business for Discovery. I think their China business has got a lot of potential, a lot of blue sky. I think when I can't remember now whether it was last year or the year before. I think it was the year before, when they stopped paying a dividend, and the market really did not like that. But I don't see it as. I think I would own Discovery shares now at this level. I think there's positive coming.
Well, something that investors are taking a bite out of is Bytes Technology. They also had numbers out. It was an interim trading update, but they didn't really give much color there. They just spoke of strong trading, and we saw that share price shooting up more than 9%. What did you make of this?
I'd say very tasty, but this feels a bit like a version of when I read the Magnificent Seven, where the company's recent performance has been boosted by demand for cloud computing, cybersecurity, and artificial intelligence, all the buzzwords we need, right? And so the company traded strongly in the first half, adjusted profit growth comfortably, double digits at 13.5%, nice net cash position. Very, and expecting strong cash conversion for the full year. So I think this is a company that's well positioned, actually. Looking forward, well positioned for this economy and where we're going.
All right. And there's something else that you find tasty or stock pick for today?
I'm going with Afrimat. I'm not sure I'd take a bite out of this company because
painful.
Not what it does. Current PE of 12 times, which is slap bang on the average of the historic ratio. So not a dripping roast, obviously, but this company with a solid balance sheet. ROE, return on equity, has consistently been in the low to mid 20s since 2017. And I think with the current strong leadership, well, Andres, I mean, he's been there forever. He's a very good CEO. No load shedding should help boost the company's earnings. I think they report, so February is the year in, so they should report around October. So I think now's a nice entry point for the trade.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today, Anthea. Appreciate it. That was Anthea Gardner from Cartesian Capital.